For more on the fallout from the president's Saudi trip, let's bring in Halima Croft. She's managing director and global head of commodity strategy at RBC and a CNBC contributor. Halima, welcome. Some of the early reporting on this does not look too promising. What are your thoughts?
I think it was always going to be hard to get a commitment from the Saudis to ramp up production significantly on the back of this visit. I think OPEC would always be the forum for which the Saudis would do some type of incremental increase over the remainder of the year. The OPEC Plus agreement actually extends through December. So all the stakes now have been raised for that August 3rd OPEC meeting to see if we're actually going to get additional barrels out of the few remaining members of OPEC that have any spare supply.
But wait, if we're not going to get anything out of this trip, why would the president embark on it?
Well, the president is saying, and his team is saying, this is beyond oil. It's about a reset in the U.S.-Saudi relationship, about America's place in the region. They'll point to the fact that you had a direct flight from Israel to Saudi Arabia. It's potentially signs of improving ties between those two countries. But I think this was the price that Biden needed to pay to potentially get additional barrels. Now, the question is, if we don't get any supply coming out of that August 3rd OPEC meeting, then I think the trip will be judged as, a potential failure. But again, I don't think this is a forum to really see a significant production increase announcement.
So I sort of take your point about resetting relations, but still wonder then what the solution is for meeting the supply that's needed in global energy markets. I guess the best thing that the president can hope for is just that the price declines we've seen, maybe owing to the Fed, keep prices down where they are for some time.
Biden has caught a break with the fact that we've seen fears of recession. Prices have, fallen, fairly far based on just concern in the market about demand destruction. But they have a real challenge come end of year, because on December 5th, that's when the European oil embargo and a whole host of other pretty severe sanctions on Russian energy kick in. So there's going to be a real need to have additional barrels really going into Europe to backfill what's not going to be going in there from Russia come December 5. So he does actually need to have a conversation with the few remaining countries that have spare barrels, not simply just for additional supply, but they're going to have to backfill the Russian volumes in Europe come December.
What's your guess these days on oil prices, gasoline prices, as we get into the fall towards the end of the year?
We certainly think that this fear of recession, the news about China, potential new COVID restrictions, that is a headwind for oil. But we still think this is a relatively tight market. And again, we would also point to what is coming in December. I don't think market participants are fully pricing in the fact that we are going to have, for the first time, very serious sanctions on Russia's energy exports. So I think that is something to pay attention to when we think about the overall supply and demand balance.
Yeah, meanwhile, they're, turning streetlights off in France and, dealing with 100-degree temps in the UK.
And Kelly, I would point to a very important event that's coming next week. The real question about, will the Nord Stream 1 pipeline, that all-important pipeline that brings Russian gas to Europe, it is down for planned maintenance. And there's real concerns that the Russians will keep that pipeline offline. And that would cause a profound energy crisis in Europe. So next week, it's going to be very important to see what happens in terms of Russian gas exports to Europe.
Yep, July 22nd, or as others have said, even if it comes back on, intermittent, outages as needed politically from here on out. A dicey situation, to be sure. Halima, thanks for your time today.